Hi, everyone. Welcome to this week's edition of Mish's Market Minute, StockCharts TV. And man, oh man, has it been a week. We've had a lot of earnings come out, some disasters, some incredible ones, and we have a whole bunch still to come up. I'm doing the video before Apple and Amazon reports, so we'll take a look at the charts in advance. Of course, the market is still obviously very range bound. We held the bottom of the range again. There's a macro picture of stagflation emerging, even though we saw GDP come in way lower. We feel that that's probably not necessarily reflective of a recession, but some issues that have come from the last quarter into this quarter with inventory. And so really, basically, at this particular point, I'd like to take a deep dive into a lot of stuff that is already reported. Look at, like I said, the couple of ones that are coming up and hopefully give you some kind of game plan within that framework of the macro so that you have something to look at as we end the week and go into next week.
So I always like to give you a little bit of a list that we've covered. I think the most fun thing is that not only all these stocks have already reported that are in the first bullet, but I wanted to throw TODOC in there. Not to make fun of Cathie Wood, although there's a lot of fodder, but also to show you what not to do. And then, of course, the two, as we had mentioned, that we were going to look at as we go forward with Amazon and Apple. So let's get to the charts. Okay, so JetBlue. I think it's a really important stock to start with because not only, as I mentioned in the very beginning about the GDP being really pretty horrible if you're just looking at it from a number in of itself, but also there's a lot of talk about consumerism, and discretionary spending has gone way down, but also we know that the consumer is still relatively strong and people are talking about getting out and moving on with their lives. But JetBlue's earnings, of course, looking back, were not so great, and we had this big gap down. Now, we have not exactly had a pure mean reversion trade because we did not clear below the Bollinger Band or the price. So what we're seeing right now is just sort of typical of what could be happening in the overall market, which is we're getting a bounce off of the oversold conditions. And if we can't get back through, say, the low of a couple of days ago before the announcement, then, we're in a situation where the airlines, and particularly JetBlue, could still wind up being a little bit in trouble. And that's where the consumers are actually starting to cut back in terms of making plans until they see what the economy is going to do. Makes sense, right? So if this turns out to be, though, some kind of bottom, we would start with a close over yesterday's high at 1132. And then it would have to obviously fill this gap, which is up to about 1150. And then maybe we can say, all right. I mean, and that's the kind of situation we're in right now. You have to be day by day to make a decision, because when you're in a range bound market, it goes like that. This is not a bull market. No, by no means. And now let's look at also UPS, because UPS also reported earnings. And you had really basically another move down. Now, you had a new 60-day low here. You had a inside day as of the day before, and now today you are getting follow through. So that's a good sign. And in momentum, in the case of momentum here, although you did not get the Bollinger Band reversal in price, you did get it a little bit here in momentum, but you can see we have a long way to go. And we also really have to clear all this consolidation. So if you want to kind of gauge whether or not this economy is going to do more than just stagnate, I would say look at UPS, see if it can get through like this 192, 193. Will it have resistance all the way up? Absolutely. That's what a trading range is all about, what makes it so hard, but at least it'll be somewhat of a positive sign. Now, the next one looks a little bit different. This is IBM. We actually have very close eyes on IBM. You can see, obviously, we had a mean reversion to the downside here. This was clean. We broke down under the Bollinger Band. At the same time, we started to break down under the Bollinger Band here in real motion. These plugins are just so great. And so also showed tremendous leadership, obviously, after it reported against the SPY. But now what I'm looking for, and I think was so interesting, is we're holding around this 134, 135 level. We have the bottom of the candle body here, and then we have the lows, these last couple of lows, all around this level. So that gives you a very good short-term area to look at to trade against. What I'd like to see now is these last 2 days highs being taken out. So with IBM, for example, you really want to take out this 137.12. And then you have a pretty good risk. You can risk really super tight to underneath those lows that I just mentioned around 133, 134 to see if this has got some legs. But this is in a strong phase as opposed to the first two stocks I showed you, which are actually really in negative phases. So this is something really to keep your eye on. The next one, of course, is good old Tesla. Now, of course, Elon Musk has been all over the news this week with Twitter. Actually, tonight, Twitter is another one of those earnings reports to look for. It may even be the last earnings report that stock has before it goes private, but we never know with Elon. He's volatile, anything could happen. So right now with Tesla, there was some talk that if it broke down, that actually a lot of he might be selling the stock to pay for the Twitter. And we don't know that it's just rumors. But what is interesting is you had this huge breakdown after powerful earnings. We've broken down under the 50 into the 200. We kind of basically had a very tight range yesterday, a big dump today, and it's trying to recover itself today, currently trading right now at 882. So 900 is key. It's got to get back through 900. If it can, and the market rolls over again, I'm thinking more like 750 would be the next place that I would be interested in buying Tesla. Through 900, again, be nimble. If it doesn't follow through, get out. And on that note is Ford. So Ford reported, again, reported well, reaction not so great. Sold off initially this morning, made a new 60-plus day low, working on a potential reversal pattern and mean reversion. Well, more so in price than in momentum, because you can see it's been above the Bollinger Band. But still, you have to ask yourself, are supply chains over? Are people going to be waiting months for their cars? Orders are one thing, deposits are another, but how long till people really start making the change from gas guzzlers and actually going out and buying an EV? And Ford would certainly be at the top of my list of where people might go. But nonetheless, from a technical standpoint right now, we still have a situation where we have a bearish phase, a lot of resistance overhead here at around 1675, and we're trading only 1475 right now. So that means we've got $2 of pain of resistance here. And if we cannot hold these recent lows, it's possible if we pull back on Ford that we can go back down closer to about 12. I would certainly want to be a buyer down there, though. The next one, of course, is the other car company, and that would be General Motors. General Motors did not sell off as hard and actually has somewhat of an interesting formation in terms of a potential double bottom. Momentum not that great, but of course in line with what's going on here. Also in a strong bearish phase, but it's been in a bearish phase longer than Ford has, which might actually make it more compelling. So I'd keep my eye on General Motors now that earnings are out of the way. Maybe want to get involved around 40, 41, and then I would risk to under today's low to see if it has enough muscle to tackle the 50 and then beyond. And that's why risk reward right now is so much the name of the game, number one. And number two is you really have to look at things from a shorter term stance unless the market really has bottom, and there's a lot to prove before we're going to say that. Another potential good trade here based on mean reversion of momentum, but certainly not price, is NVIDIA. Now, NVIDIA, of course, is the darling of the semiconductor world. And even though NVIDIA is a company that's never going to go away, you always want to make sure you time yourself well, because you can get really hurt waiting for NVIDIA to come back. So if we look at the lows that we had here in March, we're below that, 205. So I would say keep that 205 number in your head. We can get through 205, even if we just get a rally to 237, 240. That's a good rally, right? That's a $35, $40 rally. But if we can't, Right now, we're getting another reversal pattern, which means we made a new 60+ day low right here. And then we're getting a reversal of that with a close above it today. So far, day's not over yet. So through, if you really wanted to say, didn't want to wait for 205, but you wanted to do something quicker, maybe I'd say 199, 200. But again, nimble is the way of the game. Then also, as I mentioned in the very beginning, you've got the Fed meeting next week. Now, this one was the one, those of you who came to the draft and saw, I picked Facebook, and I picked it because I thought that perhaps Mark Zuckerberg was being undervalued as a CEO and as a visionary. And yes, there's been a lot of controversy around him, and some of it very warranted. But nonetheless, he's come out and made a couple of announcements. Not only are they start to see people come back into the service, they had an increase in terms of the people that have joined the service, but he is going to stop buying a lot of stuff and really maintain the equity that he has within the company to try to increase their revenues going forward. That's like the opposite of everybody else. He wasn't talking about stock buybacks. He wasn't talking about creating new products and going forward. He's already got metaverse stuff going on. In fact, this is now called Meta Platforms. But look where it stopped as I'm talking to you, right at the 50-day moving average. So this right now is key. Was this a one-day wonder off of good earnings and starts to roll over, or will this sustain? So very easily, we broke over the 50 in momentum, but remember, we need 2 closes above it on the 50 to confirm in price. And then you got a pretty good risk. You can risk to under today's low of 192.93. Now let's go on. I don't want to run out of time here because I have a lot to cover. This was the other one I picked for the draft. This is Linde Place. It's raw materials, commodity chemicals, German company, turned around today, also reported earnings, had sitting here on the 50, has now cleared both the 50 and the 200. So at this point now, again, we got good momentum here, not quite as strong as it needs to be, obviously showing leadership, but we want to see what happens. Can it hold up on this type of rally? And so what I would be looking for is for it to hold around 309, even if that's under the 50, get a good risk to under today's low. And if not, if at least dips to 312, then I think you might have a good move in this stock as well going forward. Next thing after that was one that I actually wrote into my 2022 outlook was Cheesecake Factory. This also reported, and again, opened up lower and now hit the 50-day moving average and has backed off a little bit. But momentum is really good on this one. I like the momentum. I like the leadership. So once again, simple, wait for 2 closes over the 50-day moving average, and then you have an opportunity to see if this thing has more legs to the upside. Visa, as people are starting to buy using debt as opposed to cash, Visa did very well in its earnings report as well, is over the 200 today after holding the 50. But we need a second close here to get really convinced. And then, of course, it's going to be a matter of risk reward. If you have to risk down to under 213 and you're buying it at 222, you have to realize you're risking about $9. So that means you want to really see a move up to 240. This would not be one of my favorite trades because I really do believe that the consumer and their buying may not necessarily be robust going forward because people are really worried about recession. Now, this is an area I love, and this is Tilray. This is cannabis. This is Canadian cannabis. But talk about a space that's been beat up. My goodness. Now, I'd love to see the momentum get even better and clear that 50-day moving average on the momentum indicator. But what I was encouraged about is we made a new low here at 478. Today's low was 481. Would I start screaming double bottom yet? No. But I would say that I would be very encouraged if, and what would make me think more about a double bottom is if these last couple of days we can get back through, let's say 535, 540, then at least you know you have a pretty good risk. And I also just think that this is the selling is dried up. And even when the rest of the market was making new lows this week, or I should say new lows for the last couple of months, like the Russell 2000, this kind of held, because that's telling you that there's just not much selling left here in this space. At what point does the buying come in? Another one that reported, of course, was Alphabet. Again, disaster. This is a classic price mean reversion, not followed by momentum though. So again, one day wonder or not, we don't know, but this is a reflection of what could happen to the rest of the tech space if the Fed actually goes and raises 50 basis points, which I think they might. And the other type of disaster that we had was Netflix. What did I do? Okay, so with Netflix, oh my God, but is Netflix finally seeing the end of the sell-off? I still watch Netflix. I still like a lot of the stuff. Obviously, they had a lot of business model issues. Would I be a buyer here? Probably not yet, but we did make a new low today and turned around. So you know what that means. I would like to see another day where it closes above whatever the high turns out to be today. So far, it's 201.44. And I would like to see this come back through the Bollinger Band on momentum. But certainly not to be ruled out entirely. The one that you should be wary of, if there's anything you should learn from Cathie Wood, it's this. Don't pile up into a weak stock before it reports. I mentioned with Facebook that I would wait for the report, and you had plenty of opportunity to get in today on the lows, number one. And number two is watch your risk. I mean, if you're buying a beat up company and you don't know where your risk might be on any kind of an overnight trade with right ahead of an earnings report, this is the disaster that you're seeing right here, which is why one of the reasons why ARK may turn out to come back today to unchanged, but it's still one of the worst underperforming assets right now in the whole market. Microsoft, of course, is a company kind of like Facebook that's pretty solid, but this too, with the whole tech thing, sold off as well. Now, we are quite there in momentum. We need to clear that 50 and back over the zero line. And we're obviously not there in the price back over the 50. But if the market really has more legs to it, and I'm giving it a big if at this point, because we still have Apple's and Amazon ready to report tonight. So we'll see what happens. Then Microsoft is always a good company to look at. But do I think this is going to new highs? No, this would be more of a bounce. Now, we do have nice bottoms down here at 270, and we're only $20 above. But it would be a tough risk unless you're a really passive investor. So I would at very least wait for that 50-day moving average to clear. Now, another one was Kraft's. This thing obviously reported well, but sold off a little bit, and now is coming back. And this is in one of the stronger phases. However, we did have a mean reversion trade here. So at this point, you almost have to wait for it to clear back over, let's say 44.45. Then you could probably risk somewhere around 41.50, 41.60, maybe even 42 to see if this thing can keep going up. It's a consumer staple. And as we know, that can continue to stay hot, even in a stagflation environment. Now, this is also a technology software stock. This is Snowflake. I liked Snowflake a lot last year. This year, I haven't touched it. But again, we're not great in momentum. We're certainly not showing leadership. We're consolidating here after having already made a new low back here in March. But once again, we need to see more from this stock. We need to see a move back over 200. And that could also be a good indication for the rest of the market. Similar to that is ServiceNow, another technology software stock. Bounce, kind of like Facebook kind of bounce, but not really as strong, right into resistance. Did start to show a little leadership today, did have a good momentum play in terms of mean reversion, not in price. But again, lots of resistance. So I'm showing you these things because the tech stock will be the area that brings the market down, along with a slowdown in the economy if that continues with the Russell 2000. And some of the other areas that could actually maintain, because they may be more recession proof, like a Facebook, or even an inflation proof, could continue to do very, very well. So that's the plan I'm trying to give you. And I'm going to end with the two stocks that are reporting today. So let's talk about Apple. So Apple did one really great thing. Apple actually announced that they're going to be able to give you a self-repair kit for their phone. As one who has smashed every single iPhone I own and had to take out insurance, to me, that's good news. Not that I think I could fix it necessarily, but I certainly know plenty of people who I can get the kit and say, here, you fix it. And that might help a little bit. Do I think that's the end all be all for Apple? No. Do I think they're more plagued by slowdown in China and chip shortages, et cetera? Yes. Do I think they could be potentially plagued as a cyclical, as the ideal cyclical of people not running out to buy the next version of the iPhone or the iPad? Yes. So tonight's earnings are going to be very interesting. We did have a mean reversion trade, which is why we're getting the pop, but let's put that aside right now. If the earnings are great, what I'd really want to see now is for Apple to get through this 171, 172, and then you can use that 50-day moving average as your support. If the earnings aren't great and this thing collapses and breaks down under 150, we've had several tries to hold at that 150 level, 149, 150, then I think we might see Apple go down to about 137 before we take a fresh look. That's why this is key, and that's why people have their eyes on it. And finally, the other one to report is Amazon. Again, look at consumer spending habits. People aren't buying necessarily as much as they need to, although Amazon still is very competitive in price. But you have a declining slope on your overhead 50. You are in a bear phase. Yes, you've gotten a pop here today along with the rest of the market. If Amazon comes out with earnings and it takes it back through this 3070 level, maybe that would be more interesting. Otherwise, if the earnings do not turn out to be all that great and we break down under these most recent lows, we have to go back in history a little bit here. You can see how much support we have here. Next real area support doesn't come in until we get down to about 2,200.
Okay, so I hope that gives you a lot of ideas. Again, always keep in mind what's happening with the overall market and the bond market in particular. We have Fed meeting coming up next week too. That free money that everybody loves is now gone away, probably for a very, very long time. Hope you have a great, wonderful weekend. Thanks so much for watching, and bye for now.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.